Hi everyone, today let's talk about Macy's getting bought out, as well as Oracle and Oracle's earnings announcement. Then we'll get into the charts, as well as my accounts. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Macy's surged 21% after receiving a buyout offer of $5.8 billion, which is a pretty strong offer. That's $21 per share, when most people thought it was closer to $17 per share in terms of value. So this tells me that people are still buying retailers. Retail still has a market out there. They're not getting completely swallowed up by these discount online retailers, as well as Amazon. And Arkhouse Management, as well as Brigade Capital Management, thinks that they can turn Macy's around after declining sales 7% year over year in third quarter, which is definitely interesting. It'll be one to watch here after. I think this could be something to watch going forward in terms of retail for the overall economy. And then taking a quick look at Oracle, they were down massively after their earnings announcement. They did meet on earnings per share, missed a little bit on revenues, 5% year over year growth, not bad, but their forward guidance obviously was not great with the massive down move in the stock. Cloud services were up 12%, and their cloud infrastructure revenue reached $1.6 billion, which was up 52%, which does seem like a really healthy growth number. But I think this was just a little bit overbought. You can see Oracle shares were up 41% so far this year, outperforming the S&Ps by 20%, and the forward guidance and the actual earnings announcement was just not good enough to maintain that valuation. Moving over to seasonality just for a moment, don't forget we are in a bullish period. Most markets are flat, if not down slightly, up until the 14th, 15th of the month. So at the end of this month or in that witching period. And then after that, it is basically all bullish for the rest of the year. So even with the runs that we're seeing right now, we're not even technically into that most bullish period yet. Moving over to the economic calendar, basically nothing on there for today. You can see these auctions came in much lower than the previous auction. And then looking at tomorrow, we have this CPI data. That obviously is going to affect markets greatly, especially with the FOMC later this week. Then you have the 30-year bond auction, and then federal budget, always interesting. Looks like they're forecasting a positive budget. That seems unlikely, but that'll be something to watch. And then don't forget, on Wednesday, we do have the FOMC in the afternoon, as well as PPI in the morning. Moving over to Max Payne, you can see the put call ratio is still very, very high at 3.2. Total options almost 4.7 million. Max Payne way down at 441. Stock price sitting way up at 460. You can see there's just a ton of puts, which means probably going higher. 420, massive put wall. 435, massive put wall. 440, that is your Max Payne area between 440 and 445 would make sense. But really above 450 is probably what we're going to get with just how many puts there are in the market. And once we get up to this 460 to 462 area, all of the puts are basically out of the money, which is probably the close that we're going to get. That is the close that we've been seeing over the last couple of weeks. Moving over to the charts, there's really not much to highlight from the Sunday video. We were bullish going into the day. We got another bullish run, continues to grind higher. Bullish day, we watched this breakout here, got an update on Friday, got another continuation on Monday. Next level 463.70, trend resistance up around 465.77. Momentum bullish on the 4-hour chart. Let's go ahead and look at the daily chart there just for a moment. And we were talking about this one before. It looked like a consolidation. Now we got the acceleration out. The question is, where are we going to end up? And it does seem like that upper trend line is probably where we're going to end up, around 465. Moving over to the NASDAQ, again, another really bullish day, 0.85%. Again, we had that kind of consolidation. We gapped out of it, broke back in. And then on Thursday, we had a gap up and a rally. Friday, rally. Monday this week, rally again. So everything still looks very strong. Came right to that next level at 395.85. Touched it in the after hours. And now we're following a little bit on that Oracle earnings. Wouldn't surprise me if we saw at least a little bit of a pullback, maybe down to 495.50 or so. But of course, on the daily chart, momentum bullish, RSI bullish. Still watching this slight divergence that we have. Peak RSI was going all the way back to 20 November. And since then, we've consolidated. We now have higher prices with weaker RSI. If this continues to rally, we could make a new high for RSI. and then the rally is back on, and so far everything continues to look bullish here. Moving over to the Russell and the Dow, the Russell was bullish, but not very much. The Dow, the S&Ps, the Nasdaq, they were all much stronger than the Russell here. I was a little bit surprised to see that. The trend still held. We tested the 9 EMA on the 4-hour chart. Bounced from there, had a slight bullish move, not very much, basically stayed in this same range. I didn't even move my alerts for the day. Overall, still slightly bullish, so we're still in good shape there in terms of structure, but not as strong as the other major indices. And looking at the Dow, this continued its run up to my next level, 365.11. Didn't quite get there, but I would expect to get there probably tomorrow. And then you can see momentum did flip to bullish here just slightly. Still super overbought. We've been chopping in overbought conditions for a long time here now on the Dow. Just an absolutely massive run on the 4-hour chart. You can see we got into overbought conditions all the way back here around the beginning of November. Pulled back a couple of times, but we've been chopping right around that 70 line, almost as if it were the 50 line for RSI. So doesn't mean we can't stay overbought for a while. Does seem like we're going to continue to make new highs. Like I said, 365.11, above that 369.50. Moving over to SPX divided by the M2 money supply. I don't talk about this one too often, but I did want to highlight it here. We did get into a region we have not been before in a long time, going all the way back to the .com bubble. We closed at 22.31. Our previous high was 22.29 for this ratio. We hit that mark on 27 July. We also hit that same mark here on 5 November of 21. So we are now above these most recent highs on this indicator, and the question is, where are we going to go next? Like I said, the next levels are from the .com bubble, and I need to start filling in this area because we don't typically get this high, but you can see it here. We are now broken out to the upside, and this is effectively price discovery for this ratio. The last time we were here was the .com bubble. Moving over to Apple and Tesla. Apple actually broke down here today. Interesting. 4-hour chart was this choppy upward channel. Broke that level in the pre-market, followed through down to the 55 EMA. Pretty big down day, actually. That candle was 1.5%. Then it pulled back slightly, 0.65. But based on this is now sideways chop. We were in this range for a while here. Then we had a pretty consistent channel. Now we're broken back down into that range. This is now a new low. If this establishes a lower high, then we could look for a lower low. Apple making some lows is not typically great for markets, which is interesting to see Apple going lower with the rest of markets going higher. And looking at Tesla, we have been in this choppy range for a while. Let's go ahead and zoom in here. You can see that choppy range, tried to wick high, couldn't hold that, and then we continued to chop here. We did have a very similar price action to Apple, actually, with that big move down in the pre-market and then that first candle, and then we held in this mid-range. I actually kind of liked the look of Tesla going into the weekend, but with that candle here today, that's not great. We are technically below all of the shorter-term EMAs on the 4-hour chart, with some slight bearish momentum. Again, still range bound, but doesn't look great right now. Moving over to Oracle on the 4-hour chart, you can see that big bear candle on their earnings announcement. Stock went from around 115 all the way down to 106. This is a price range that we last saw here at the beginning of November, so we gave back all of those November and part of December gains. Touched that level here right at the pivot point from the end of September, beginning of October. Bounced a little bit from that level. If that breaks, then you're looking at about that 100 level, the low here from the end of October. And then zooming out a little bit further, you can see the next low is 96.67, which is the wick high here from 18 April and very close to that wick low here from 24 May. So in terms of structure, it is pretty much range bound. You can see we had our most recent highs going back to 15 June and then again here on 11 September. And we are well off of those highs, but we are pretty well off of the lows unless this earnings announcement follows through to those most recent lows. And then if that structure breaks, then you're looking for lower lows into this 96 to 90-ish range. And then moving over to Broadcom and AMD, these are the stocks that were really driving the NASDAQ higher here today. You can see Broadcom 9% on the day, massive candle, $85 on that move. And that was after a gap up and rally on Friday, 2.39%. So Broadcom has been on a bender. Look at this volume. Look at that spike. Massive moves. These are all-time highs here for Broadcom. Let's go ahead and add some levels at this previous wick high, just in case we get a little bit of a pullback. But this is clearly price discovery. Everything's going higher on Broadcom. They did have a couple of news announcements saying that they were basically doing great things, and Citibank came out with a price target of $1,100 for them, which doesn't give you a ton of upside, but continues to be a massive earner here on Broadcom. And then you got AMD doing similar things, 4.26%, massive move, took out my next level at 132.45, next level 138.94, continues to look bullish. Again, volume continues to stay high, momentum looks clean here, and semiconductors still on a run. Moving over to staples and discretionaries, staples did perk up off of that 21 EMA. We talked about how it needed to hold there if it was going to do it. Sure enough, it did, gapped up and rallied right back to that level. Need to see it get above 70.85. We'll see if that happens here. Did show a little bit of weakness in that area the last couple of times we've been there. So again, need to see that breakout. Momentum says it could happen. Volume, you like to see it on that up day. And then here on discretionaries, continuing to grind higher, about $1 to that next resistance. Massive volume. Everything still looks good here on discretionaries. Moving over to breadth on the 20 and the 50-day average. I do want to highlight this slightly down sloping 20-day average that we have here. This 86.50 area is typically where we see some resistance. Occasionally you see some higher levels up almost to 100%, but we don't really get there very often. Did see a slight step up in momentum towards that bullish direction. If this breaks out back up into this range, that would be quite bullish. It absolutely can. We've seen things like that where we see some shorter term pullbacks get back into this range before we see that ultimate move back down into these kind of oversold conditions between that 7 and 10% or so. But you can see pretty consistently when we get into this 86 area, within a couple of weeks, we do see a pretty significant pullback. And then similarly here on the 50-day average, we are getting into that region where we typically see pullbacks. But right now we're still moving higher, and you do have to trade what you have. Moving over to the dollar, not as strong as I would have expected, but still a bullish day. So 0.1%. Obviously, this is going to be massively affected by CPI tomorrow. And at this point, it seems like it could go either direction. We were throwing some wicks of rejection at this 104.20 area. My level that I watch is 104.4. We'll see if we get into that zone or not. Still bullish momentum. RSI still needs to break above the 50 line. And it really does seem like it could go either way. We're below the 9 and 21s on the hourly chart, which is not great, but we are still above the 55 and 144. So again, mixed signals on the dollar, waiting for the news tomorrow. Still coming off of this pretty decent low down around 102.50. Moving over to yields just for a moment. Slight down day on the 2-year yield, 0.28%. Slight up day on the 10-year yield, 0.14%. Definitely interesting. Both of these at a pretty critical level, so we're wicking that 21 EMA on the 2-year. Wicking this resistance line here today. If we see CPI come in a little bit light, maybe we see yields break down. If CPI comes in high, we could see yields break out. And I do expect that to be bearish for equity. So CPI could have a bigger impact tomorrow than it has here recently. CPI has been trending down pretty consistently, but I think this could be an interesting one tomorrow at 8:30. Moving over to bonds, J&K continues to chop in this range between $92.50 and $93. Got into bearish momentum here, RSI breaking down a little bit, so that's not great. Rally up, consolidation, momentum flip. Does seem like a little bit of a pullback is coming, which means yields would be going a little bit higher. Kind of seems like a leading indicator there a little bit. And then similarly here on TLT, 3 days in a row of downward movement, holding right at that 9 EMA. Momentum stepped down for 3 days, right on that RSI SMA. If that SMA breaks, then we could see yields going higher. And again, it does kind of seem like that's going to happen tomorrow. Moving over to volatility, move index down a little bit after gapping up to the close from the Thursday session. Interesting price action, kind of chopping in this zone here. And then looking at the VIX, gapped up pretty strongly and then fell below that 1275 level. So continuing to hold in this range, which is interesting, waiting for that 21 EMA to consolidate in this range, I think. Momentum continuing to stay slightly bullish. RSI tested the SMA and then bounced higher. Definitely interesting there. Does seem like this is going to pop higher, but again, you don't know when that's going to happen. You can see we held in this range for quite a long time before we saw that major push with a pretty decent wick high here in the middle of July. Moving over to my accounts, I made a little bit of money. Not typically as much as I would like to see on the rally that we had today, but I am just a little bit hesitant here. I'm still trying to stay on the bullish side, at least in the shorter time frames, and I still have some 393 puts for tomorrow, which are already over a 50% profit. So continuing to bring in a little bit of money on those puts every day, but still having these calls, which are pretty deep in the money at this point. Some 391s for 9 days from now. some 390s for 25 days from now. Max profit still quite a bit higher from here on those options, but still quite hesitant on this slightly bullish position. And then looking at my profit graph in terms of price action, just to give you a perspective on what I'm looking at, I do think we'll move a little bit lower at some point over the next couple of weeks, understanding that seasonality says that we could rally into the end of the year, but we have already rallied pretty strongly over the last month and a half. But even with that, you can see my max profit to the upside where I start to lose money is all the way up around 407 on the NASDAQ. So about another $12 of upward price action before I'm losing money to the upside on an expiration basis. So still allowing for some bullishness to the upside while giving myself a little bit of a hedge to the downside. Let me know down in the comments section what you think of Macy's or Oracle, or where we are going after CPI and the FOMC statement over the next 2 days. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.